Hello again, traders. Right, this is another off-the-cuff video. Um, as you know, if you know me well, I live and breathe charts, much like a lot of the price action traders you will come across, and in particular, a lot of the guys uh, of the 3CR squad, if you like. We're all like-minded. It's not because of the 3CR squad. It's because I imagine people like this gravitate, to each other. So we have yet another off-the-cuff impulse video, but I was looking at gold. I've been trading gold all morning. I've lost count now, probably about 4 or 5, 8 to 12 pip trades, because gold moves so fast. And what I'm finding with the indicators now, Aaron's 3CR indicator, along with the RSI histo that's hiding behind here just for cleanliness oh, sorry, I didn't mean to flip between charts there, and clarity. But the point of this video is to inspire you, if you don't do anything else at the weekend, study your 3CRs, study. In this instance, this video is about the TMA slope. Decide for yourself, build yourself a trading plan, if you like. Over trading will kill you, so just make a solid plan. I tweeted about this yesterday. Choose your time of day you want to trade. Choose why you want to trade. It might be the London Open. It might be the volatility of the 2:30 stock market open. 2:30 in the UK, that is. I think it's 8:30 in America. Parts of, should I say. I mean, look at this gold now. I was so tempted to have another go at that, but I didn't because, I didn't want to tempt fate, and it was sort of breaking my rules. It's for whatever reason, it's 2 o'clock, half an hour before the stock market open. Well, it's 10 past 2, to be honest with you. I was on my way out to do the horses about 2 hours ago and just got distracted. So I will be off out, and that'll be me for the day. So let's get to the point. TMA, it's set to 7. You can play with the settings as well. And I'm talking about that one setting there. I haven't really adjusted any of these settings from the default. So there's the indicator. You'll find it on my extensive thread with all my indicators. Every one of them is free. There's MT4, mainly MT4. I think 90%, 95% are MT4. MetaTrader. There's Think or Swim, TOS. There is TradingView indicators. There are links to MT5 indicators and a few to other trading platforms as well. Not many other ones, to be honest with you. But there we go. That's the setting, 7. It is a scalper's. It's lined up with the 3-candle reversal and the RSI histo break of the 20 level and the bus break and close. And all those things you'll find on my YouTube channel. You have to use the search facility. Look at the playlists, work through them, use the search for finding out stops and stuff like that. But back to this. Look at this. I'm not really interested in continuations, so pullback continuations, although you can do the stats on that. But once we've got a change of direction, a 3CR, this one's not the best example. But the point is, we've closed on the M15 powerful. What do we expect after a 3CR? A pullback. What can we do? We can trade it using the M1. And the same triggers, RSI histo triggers, 3CRs on the 1-minute platform should get us in the direction long. And that was a 9 pip move there. So 7 or 8 pips, start off 6 or 7 pips or whatever. And as you see things getting better and better, we can see where the problem was for this. Straight into a supply area there. So, that's where the liquidity is. So, you have to use the knowledge we have got about supply and demand and all that stuff to filter out the bad examples. But another one, big old change of direction, breakout of clear resistance or supply running out, whatever you want to call it, sellers running out, and then boom. And that there would probably be a 20 pip, 17 pips on a 15-minute chart. So you can teach yourself the continuation. Same rule applies, but I've highlighted really the main ones, the changes of direction. And every trade looks the same. How many times do I say this? There's a trend reversal. Then we get the TMA slope tells us we're good to go. This will all be red at that point, and lo and behold, there is a 76 pip move in one 15-minute candle. Time of day makes a difference. Some of these will fail because of the time of day, middle of the night, whatever, after say 7 or 8 o'clock in the evening, between the American close and the Asian session open. Not such a great time to trade. Having said that, because the moves are so solid with gold, big moves from 5-minute, 15-minute charts, if you're scalping for 7 or 8 pips, not such a bad idea. So we had a change of direction here. I didn't check this one. I missed that one actually. There, turned red, and little bit of that was probably a great example of what I was just talking about. Silly o'clock, 4 in the morning by the looks of it, something like that. 6 pip move, but ultimately with very little drawdown, 7 or 8 pips drawdown, which is unusual for gold. And that's what I mean by outside of the normal trading hours, the algos are in control, and you shouldn't get any nasty surprises. Don't quote me on that, but ultimately it went down about 12 pips. So take the trade, go to sleep, 8 or 9 pips in the bin pretty safely. So once again, we get a change of direction, close of the bar, the next bar opens up, and there you have a 27 pip move, or in total, it's gone forever, but before another nasty pullback, which didn't hit your entry point, by the way, 33 pips. So you could have entered the trades, moved it to break even, or set some sort of EA to do that, and followed the ride all the way up with the remainder of the trade without getting stopped out. Excuse me. So what have we got? No signal to the downside, another signal to the upside here. Remember, that's the new bar, the opening bar, and off it goes. So the point of this video is not to be Bertie Bigwhatsits. It's to just encourage you to do your own homework. Don't follow what I say religiously. You have the tools. They're free. You have your charts. I say this a number of times. Everything you need is on your charts. I didn't look at that one either, but probably left it out because it was straight into a supply area. What do I always say? Try and be above sellers if you're going long. So this sort of area, which is a brilliant one. You can see that was brilliant. Another 15-20 pip move almost instantly, next 15-minute bar, so you're out and done within 15 minutes most of the time. Another bonus for this sort of trading. And yeah, this one, it would either have failed if you'd entered it, but you should have been very, very wary of entering straight into a support level. It did close below that line chart, so yeah, the jury's out. What time of day was that? 13. Yeah, so that's running straight into the middle of the morning. That's 11 o'clock UK time. So iffy one there, but you're not going to win them all. You have to learn to enter using the lower time frames. You have to learn to read the charts, but probably an 80% hit rate here with reasonable, if you're using a 1 minute chart to enter these moves, following the rules with the RSI histo, you should be limiting your stops enormously. People talk of arbitrary numbers for stops. I've done it myself. 20-25% of the ADR is, what you would put on as a automatic stop the minute you hit that button. But really you should have calculated where your stops are based on the support and resistance levels. You should have, based on previous candles. Wicks Don't Lie uses the previous candle close to follow his price up. So a stop would be below there if you were entering here, and so on and so forth. A stop would be, using that rule, your stop would be below there, entering here, and as you can see, you would have closed out with a profit before your stop had even been approached. That was a nasty spike. No idea what that was. But once again, if you're entering based on this candle here, your stop would be below here according to Wicks Don't Lie. Vice versa here. Now, this is where you have to, you could apply your knowledge of supply and demand. Clearly, this broke out of that level there. So the safest place for the stop would be just below that level. So there you go. You've already saved yourself a huge amount of risk by applying old resistance acting as new support, and you can see it's clearly used it as well. But you would have been out of the trade again because we're a scalper. So, stops are something you need to look at closely on your own when you're doing your own analysis and basically teaching yourself this method. So everything I do is about encouraging you to think for yourself based on these fantastic indicators, which are based on the priceless 3-candle reversal, in my opinion. So remember, a 3-candle reversal is when price breaks a level of support, it breaks a level of supply, or in this instance demand rather, breaks the demand. So the buyers at the bottom of this candle have been overwhelmed and broken below by the sellers on this reversal candle, and they come back and test to see if there's any more buyers left in the market. And when the sellers say, yeah, we're going down, boys, and by that I mean the institutions and the algorithms, retail traders make not a blind bit of difference, and the sooner cryptocurrency traders realise that, the better for them. And then down it goes. Another little last hurrah by the buyers, in other words the algos, faking in the buyers. Cryptocurrency traders, especially BTC boys, need to understand that as well. They seem to think one green candle represents the whole thing reversing in their direction. They will learn. And then once again, the algos and the institutions take the price down. A 3-candle reversal is an indication of the balance of buyers and sellers and buyers changing. That, in my opinion, is why it's so powerful. And that is why I love it and I believe in it. Of course, you do get fake ones, but that's why we don't just hit it as a result of a 3CR. We use the lower time frames, watch the pullback, watch the continuation, watch the new pullback because of a continuation breaking new support levels, new buyer levels, and continue until you're right down to the 1 minute. If you want to get into tick charts, you can use those as well. They work in the same way. You are trading, in my opinion, the safest way to trade. Okay? And on that note, on BTC, really, the safest way to trade BTC is wait for it to break 64,000 again, pull back, test it, and then continue on up. That's the safest way to trade Bitcoin. And believe me, everyone will probably pile in at 64 if it ever gets there again. It will probably crash down to 47 or something, or 50% of 60, which is 30, just to piss everyone off again, excuse my French, and then do that. Another little point, remember, if you're trading, there's no reason, think of a weekly chart as a 5-minute chart. You know, if this was a 5-minute chart, yeah, 5 minutes it's pulled back, 5 minutes it's back in the line, 5 minutes, so 3 5-minute bars. If that's a monthly chart, you've got to wait a month. Or if that's a weekly chart, you've got to wait 3 weeks to get back in the right direction. So why are they expecting it to go from 64 down to whatever it was, roughly 30 now, in about 3 or 4 weeks? Why are they expecting it just to take off again? It doesn't happen like that. Thanks for watching. Have a great day. And a great weekend. What's going on here?